Look, I'm between like everybody else, and I think the market is. And I think you have a lot of this volatility because one day the Bulls are in charge, the next day the Bears are in charge, and they each get a football on different days, and they run with it in their respective directions, right? We have the global economic weakness, U.S. pretty strong. We did the rapid update yesterday, running 2.1% in the third quarter, and that's because of the strength of the U.S. consumer. Right, we have the bond market calling for inversion. The economic data says, maybe not so quick on a recession story there. And then, of course, you have this interesting split in the U.S. economy with the consumer doing pretty well and manufacturing, pretty darn close to contracting. We've had a slowing growth rate in the U.S., but globally, manufacturing has been contracting. I just looked at like a dozen different growth rates, and every one of them is lower globally than it was the prior quarter, Scott. So, look, I think there's an argument for a cut. I don't think Powell has shown himself to be somebody who talks the market down or up either way from where it is. I think he likes to get that pure market signal, one where he doesn't necessarily guide it. At the same time, it's about an even flip whether or not he meets market expectations, and the market's price for that quarter point in September, I think that's about right. But there's some guys on a more aggressive part of that trade where they're looking for a 50 basis point cut in September. That's what Rick Reeder called for this morning from BlackRock. And that's about a 30% or a 25% probability in the Fed funds future, Scott.
Remember, though, last time, Steve, the Fed, whether it was the chair or a number of different speakers, whether they spoke with you or other outlets, did nothing to walk the market back from the expectations that it had.
That's right.
The cuts that it was expecting. And I just wonder if that's going to be the same this time.
Let me throw it back at you, Scott.
Ratcheting up.
Let me throw it back at you, which is did Powell at that meeting meet the market expectations? And I think maybe a little bit not. If you think about the idea that the market got, it kind of ran a little bit away from him. I was curious. Look, we're learning how Powell works, and so far, and by the way, the whole FOMC, because I probably talked to 6 of them on our air in the lead up to that meeting, nobody took the opportunity to walk the market back. I don't think they want to do that, but I think where we may have to be careful is if he's not walking the market back, it doesn't necessarily mean he's approving of where the market's priced. It's a nuance, it's a subtlety, and it's tough to trade, but I think it's something you got to make sure you're aware of.
Yeah, well, you don't want to, the market doesn't want to get into the same pickle, if you would call it that it did last time. Getting over its skis on its expectations, and maybe the Fed's not going to meet these elevated expectations.
And if you're Powell, Scott, you can kind of understand. Remember, we originally thought of Powell as a market guy. So what do you do when you're a market guy? Well, you want to get the market signal. And as the Fed chair, you can create that market signal, and all of a sudden you're into some echo chamber, right? Where you're telling the market what it wants to hear, and then the market's giving back to you the information that you told it previously. So I think he's been pretty careful not to guide the market specifically as in you're overpriced, you're too aggressive, you're not aggressive enough. I think he's just going to lay it out. Here's the world that we see. And by the way, here's the pickle that we're in. Remember when he said to me last week when I asked him at the meeting or 2 weeks ago, how are you dealing with this global trade? He goes, we're learning on the job. Nobody knows. And that's fair enough because it's been since the 30s we've had to deal with this.
Steve, Rob, don't worry.
We got you. They were telling me to do it.
That's fine, but you can let him finish his sentence first. Go ahead.
Yeah, so, Steve, it's a matter of, are they going to immunize a patient who's not yet sick to a potential disease that's on the shores, or are they going to treat them for the disease? Right. And I think Powell's shown himself to be very pragmatic as it relates to how he does this. And my sense is he tries to immunize first, and then if there is contagion, if there is spread, he will do his best to treat the disease. So I
think that's right. But what if you only got a couple vials of that anti-malaria medicine, right? You can take one now.
Yeah, I mean, I agree.
Take one now, but you don't want to take too many of them because you may get the bad stuff later on.
I agree.
And so you don't want to be out of your immunization stuff, to use your metaphor there.
Yeah. Hey, Steve, I've got a question for you. If you forget where the Fed futures are, ignore it right now. And you take a look.
Wipe it out of my mind. Just wipe it out.
Okay, there you go. And you take a look at the data that's been coming out, and you take a look at an equity market 5% off the highs. Would you, and you take a look where rates are?
The answer is no.
Would you ease? Exactly. Would you ease? Would you cut if you were Powell?
I wouldn't ease, but I would say one thing that I hope to find out next week in Jackson Hole.